Since 21, we have spent $340 million paying cash dollars for 280. We have spent Curaleaf, $40 million.
Hey everyone, welcome to our Traded Black podcast. I'm your host, Shad Dales. This morning we're talking cannabis, midterm elections, and we bring in, he is the CEO of the largest cannabis company in the world from Curaleaf, Boris Jordan, back to the podcast. Good day, sir. Good to see you back on the podcast.
Great to be here, gentlemen. And just one correction, not CEO, but founder, chairman.
Founder
CEO,
and chairman. My apologies. I
don't want to take away Matt's positioning. He is the man in charge.
That is correct. Ben, lead financial.
I'm just a loyal soldier.
There you go. Ben, lead financial writer. Benjamin A. Smith. Good to see you, Ben.
Great to be here, guys. Thank you.
Boris, revenue up on your latest earnings report. The Jets are 6-3. The Giants are 6-2. Is life any better right now? It seems to be a very interesting fall, to say the least.
Listen, I think we're all living almost, in terms of our short-term planning, quarter to quarter, because you just remember the line from Forrest Gump. You don't know what you're going to get next. And that's kind of where we're living with all the macro stuff going on and elections and things like that. We're just quietly executing on our business strategy and watching as everything goes around us. But obviously, listen, we can't avoid it. The macro situation in the country is starting to avoid almost every business in the country.
Yeah, good point. When we look at third quarter results, revenue $340 million was reported in the latest financial report, up 7% year over year and 1% sequentially. Those numbers met expectations and guidance. Were you overall happy with how the industry, or should say your company, performed in the last quarter, given some of the challenges that the industry has been facing recently?
Yeah, listen, I think it's amazing that, Curaleaf got hit very, very hard at the end of September. Well, in September with, obviously the hurricane in Florida, where we had to shutter almost 80% of our stores during that hurricane period. And that happened literally in the last 3 days. We actually had a total loss on one store. So, the fact that we were able to still eke out a gain and losing our largest market for basically a week is just an incredible result. And then, of course, we had Bordentown, which is going to be a big producer for Curaleaf, our store in New Jersey, on the docket to be open all of September. And of course, for no reason, the regulator didn't open that store. They finally did allow us to open it in October. So that fell out as well. So if you think about it, you lose a week of revenue in your biggest market and your highest margins, Florida, and you lose a major store in your highest margin and also one of your biggest markets in New Jersey, and you're still able to show in this macro environment growth on your top line. I think that's a testament to the diversity of our footprint and our platform.
Yeah, makes sense. Go ahead, Ben.
Now, gross margins came in at about 48.5%, which is sort of near the magical 50% mark that all MSOs look to achieve, and that was up a little bit sequentially. Are you happy with your growth margin profile, especially since there was a drag from some of your investment in other places like Europe?
Yeah, listen, we had our gross margin actually was down, Ben, just to correct, because it was up annualized, but it was down sequentially. Our margin in the second quarter was 52%. So on an annualized basis, you are right, though. We're still at a 50% margin for the year, up to the end of third quarter. We expect the gross margin to be a bit better in the fourth quarter, although our fourth quarter, I just want to warn, is going to be very messy because two things are going to happen. One is we're going to be moving some SG&A expenses that really should be COGS, and it also saves us money from a 280 tax perspective. We're going to move them up, and we saw GTI do that in the second quarter of this year, and their gross margin dropped from, I think, 51 down to 47. So we're going to have that plus our gap conversion. So the fourth quarter is going to be a bit messy, but when we do, we're going to show people two tables with all the conversions. We'll actually, on our base business, will be nicely over 50%, we think. So we had one quarter down. There were three factors that really affected it. One, of course, losing, Florida and New Jersey, our highest grossing, highest margin states at the end of the quarter, did not help. But then also what we decided to do is we decided to really attack our inventory and start to get rid of some of our older inventory that instead of taking a write-off on it, I'd rather just generate cash. So what we did was we looked all over our states. We saw where we had aging inventory, and we just let it go at the end of the quarter at obviously much lower margins than we would our normal products. So, but that was very healthy for us to do because now our inventory is much higher quality inventory that we have on our books than what we had, and we got cash on it instead of having to write it off because after a certain period of time, the regulators don't let you sell it; they require you to burn it. So we decided to just unload that inventory out to the market, and that's obviously done at a lower margin than otherwise.
Boris, do you think we're getting close to cyclical bottom of industry pricing and consumer spending challenges?
Yeah, I think the good news is, and I know we're going to get into safe, but the good news right now is that no new money in the country is going into building more grows, right? So there isn't any capital available. It's too expensive. And at least in Curaleaf's case, we're lucky in that we're naturally coming to the end of that, not because we're being forced to because of capital, but because we've been doing this for a long time. And we even before we had this spike in interest rates, we told everybody this was going to be our last big CapEx year in the United States for a while, and our CapEx was going to come down half. So, but a lot of the mid-tier operators and the small operators that were, getting capital pretty easily now can't do it, and they don't have the margin profile to service that capital. Yeah. And so we're seeing a lot less. Even big companies like GTI announced, I think, that they were rolling back some of the construction in New York. So even big companies are scaling back, and that's a good thing because what that means is that there's not going to be any more, no new supply. Yeah. And eventually demand, we're seeing more and more people are coming into the stores. Yes, they're spending a little bit less, but our growth is very strong. We had 16% growth in customers coming into the stores. It's very, very impressive. And I think on the back of that, I think the dynamic will improve next year. Now, of course, if we get safe banking and capital comes down again, maybe that could change it. But right now, I like the setup. I like the setup right now for 23 and 24 in the United States.
Now, in terms of the call, Boris, in terms of the call, Cap X was one of the big takeaways that I had. That you basically said that your CapEx cycle of spending is coming to an end, like you just mentioned. Can you quantify what that means? And there's obviously it seems to be a focus on cash flow generation for 2023. And now that your CapEx cycle has ended, can you quantify how much that will be reduced from the $125 million that you spent in 2022?
Yeah, and again, I want to reiterate that will be the case even if we get safe banking. I think other players will have to start continuing to invest, whereas in our case, we're just naturally coming to the end of that investment cycle. So listen, I think that obviously things change in the world with Europe, new countries come online, but at the moment, the visibility that we have going into 23, I think it'll be down, 50%. Like I think CapEx, if it was 125 this year, I think it'll be, around 60 to 70, somewhere near $65 million next year. So that's a substantial drop. If you look at it, in 21, we spent 177 million. In this year, we spent 125 million, and next year we should be down to 65. And by the way, that's going to be really good CapEx because that's going to be going into automation, right? So that's going to bring costs further down as we start to work on efficiencies in the company, and we're going to be focusing on automation in the business. So the big, bulky, building the facilities, getting up and going is finished, and now we're working on improving productivity in the company during next year. So Matt and his team are really good at that. What they're really good at.
You talk about automation. So what does that look like? What are you focusing on specifically that investors could better understand?
Particularly, we're trying to automate all of the production side of the business. So it's about packaging automation, simplifying packaging automation. Getting rid of people on the line and making our machinery work a lot better for us. And a lot more efficient for us. And, so that's really our goal. Our goal is to, a lot of the packaging that's done right now is by hand. Sorting is done by hand. A lot of these things are done by hand. And we're really, really trying to move to a fully automated model, particularly in our big states. We're not going to be fully automating in the little states because it doesn't make any economic sense. But in the big states like Florida, like New York, like New Jersey, like, Illinois, Pennsylvania, Arizona, those are the states where we're going to be automating our whole production line and manufacturing line, our kitchens and stuff like that.
Way of the future, right?
Yep.
Want to talk because we get a lot of feedback from our viewers. They always ask about Germany. There was big news. Basically, they're going to go live with Rec probably next 10 to 12 months in Germany. So your thoughts based on that announcement and any update that you can provide, I guess, your investors on the strategy as to how things are developing within that country for you.
Listen, I'm very excited about Germany. As you know, 82 million people, 29% illicit market, calculated today by the German government around $10 billion.
Yeah.
A very good sort of medical market as well. So we're very excited about it. We think it's going to get launched probably end of 23, early 24. The major stumbling block has been in the EU and the UN treaties. Now, there is a way to avoid those. Everybody knows Canada did it, Uruguay did it. And what you do is you opt out of the treaty. You exit the treaty, you opt out of the cannabis clause in the treaty, and then you go back into the treaty. And 2 countries have now done it, so everybody knows how to do it. Unfortunately, no one's ever done it in the EU, so that's taking a little bit longer to get that done. But we believe the Germans are going to do it, and are going to do it at the end of 23, going into 24, which is why they're going to need to import from Canada, because the German manufacturing is just not big enough and will never be big enough to produce the amount of product that they need. The only countries in the world that Germany today, under the UN Charter, could import recreational cannabis from is Canada and Uruguay. Now, they could do something.
So how would that work then? Because from my understanding is you have to have infrastructure built within the country from the recreational play, but
No. That's not what So what they're saying is right now, before they cut their deals with Canada, that's the only play. But they don't have enough domestic manufacturing or cultivation to supply even 1/100th of what the demand is in Canada. I believe the whole existing infrastructure in Canada can produce somewhere between 10 and 15 tons of cannabis. That's like nothing.
Yeah.
And so they know that, and so they know they're going to need they're going to need Canada. They're going to need EU imports. They're going to need all that. So I think you're going to see them enter into a bilateral deal with Canada. Between
Which
you and
is
me,
needed
we've
Canada.
heard between you and me, we've heard it's at advanced stages of negotiation now, and they'll be importing from Canada. Now, also what they could do is they could also import from Portugal as a medical product, and then reclassify it once it's in Germany to be adult use.
Gotcha.
And that also is another way to get around this treaty problem that they have. However, they will be out of those treaties within 12 to 18 months after the launch of the program. I'm confident of it. It's bureaucratic process, and I know there's 5 other countries in Europe that want to piggyback on Germany in exiting those treaties for cannabis. So listen, it's all happening. They're working on it. What I love about Germany is you got both the chancellor, the health department, the parliament. Everybody's on side. Like, they want to do this, right? So you don't have all the politics we have in the United States around this.
I know.
In Germany, they've made the decision to do this, and they're moving forward. So we know it's happening.
Now, I want to shift focus to the ballot initiatives in Missouri and Maryland that just went through, Boris. And congratulations, because you have interest in both states. Now, I'm curious to know what kind of impact should this have on the top line once medical dispensaries go rec, as a general rule of thumb? What can investors expect there?
So every state is different, Ben, and so it depends on the penetration of the medical program in the state. So, for instance, if you remember, Arizona had the highest penetration in the country on the medical side. It was 8%, and so when they converted, they didn't even have a double in terms of growth right away, right? Unlike New Jersey, which is up like 10 times, right? Because they didn't have a robust medical program. It was a very narrow medical program, only about 150 to 200,000 patients. Unlike it was, I think in New Jersey it was less than 1%, whereas of the penetration in Arizona it was 8% or even 9%. So I think that Maryland is somewhere in between. It's got a pretty robust medical program, 90 stores, a bunch of grows. So but it's pretty early still. So I think that program probably will be at least a double, switching over to adult use. So it's a very densely populated state. So I think that's going to be a pretty good conversion. Curaleaf has around a 15 share, so we're looking to grow that share, and we're looking to and expand on it. And so that's going to be a good market for us. Missouri, problem with Missouri is we have to see what the enforcement on the illicit market is going to be like. But I think that Missouri is also probably around a double for us on the rec side. So listen, both of those states aren't going to move the needle dramatically, but they're going to be coupled with Connecticut and New York. They're going to definitely add to growth over the next 12 to 18 months. And that's what we really want to see, right? There hasn't been a lot of catalysts recently in the market for growth, particularly new entrants into the market. This is going to be an interesting year and a half. We're going to have, as I said, Missouri, we're going to have Maryland, we're going to have New York, we're going to have Connecticut. These are all states where Curaleaf has substantial share and substantial businesses. So that's going to help us out in terms of our growth in 23 and 24. Now, the reason I say 23 and 24 is because we don't know how quickly these states will convert to adult use, right? They've passed the legislation, but barring Arizona, everybody else has taken a year, if not more, to write the rules, regulations, and launch the program. So I would, we'll see whether Maryland and Missouri are going to move quickly, or whether they're going to, and like Arizona, or whether they're going to be more like a New Jersey and New York that take their time in launching the adult use programs.
Okay. So midterm election could see a split Congress where the Republicans regain control of the House. Dems looks like they will maintain and control the Senate. You and I spoke last time mid-September in Chicago and still firmly believe that safe banking will pass during lame duck session. Do you still believe that?
I do. I think I'm the only person that's prepared to go on the record to say that.
Why? Why is that?
Well, first of all, I will tell you that I see more what's going on in Washington than anyone, maybe barring Charlie Bechtel, right? So Charlie and I are probably the most active. Our companies are the most active in D.C. And I think Charlie has been like me, although I'm a bit more vocal. He's a bit more reserved. But he and I both think that they can get it through. And the reason is, I listen to all these naysayers. They have no idea. They're just discouraged because they've lost so much money in cannabis. Over the last couple of years, that they don't see what's actually going on. There is heavy bipartisan exchange of documentation and even negotiation on this law between the two parties, and I think that the current dynamic is a really good one for cannabis. Right? If you got to sweep in one direction or another direction, that could hurt it. I think we are in a situation now where both sides need to sit down, need to negotiate, and need to depend on each other to get stuff through.
But will they?
I think they will, yeah.
Okay.
Yep. And I can only say, listen, I can only tell you what my people on the ground, I have heavy infrastructure in D.C., more than any other company. One of the reasons, Curaleaf's expenses are always a little higher is we spent an enormous amount of money in D.C. on this, because I think, personally, this is so important for the industry. And like Kim is spending on Florida because that's her thing. I'm spending on the whole country, and so I've been heavily with Cresco in DC, spending money on making sure this thing happens. And so I think it's going to happen. I'll say this: we're the closest. Here's the way I'd caveat it: we're the closest we've ever been, and I think the chances are now much better that we will get it than not.
Let me ask you this. If you had to outline 3 bold predictions for this industry for 2023, what would they be?
Well, they would be different depending on whether we get safe or not.
Okay, so maybe that's a bold prediction. Do you think we get safe? You said yes. If we do get, then what would be 2 and 3 bold predictions based off of that?
Well, if we get safe, you're going to get a lot of activity in the capital markets, relistings, uplistings, all this kind of stuff. You're going to get a lot of new capital. My concern is that the capital flow into the right companies, not into companies, because 280 safe banking doesn't resolve 280E. The biggest problem in the industry is 280E.
Yep.
If you were to ask me what I would like to get first is 280E, then safe banking. But it's not going to happen that way. 280E is only going to get removed when they reschedule cannabis, and we think that'll happen before the next presidential election, but we're not going to get it next year for sure.
Okay.
So we have to live with what we've got. And the problem with safe banking is that these companies, I put the numbers out. You guys remember, since 21, we have spent $340 million paying cash dollars for 280. We have spent Curaleaf, $40 million. That money would have been at the bottom line. You imagine what the profitability of Curaleaf would be if we would. I mean, we'd be cash flow positive. We would be net income positive, and probably paying a dividend if we were to have that kind of cash flow.
Think about that.
Right?
Now, is that the future? Is that the future, Boris, where you could foresee like 2 or 3 years out? I know we're getting long cycle here, but that this company could actually create, pay out a dividend like a Coca-Cola in the future?
Cannabis companies are going to be big dividend payers eventually.
Wow. Okay.
Because once we built the infrastructure, the capex is maintenance capex and efficiency capex, right? And if it's not M&A, what are you going to be doing with the capital? You're going to be paying it out. And these are high cash flow generative businesses. So there's no question in my mind we would have been paying dividends. I think probably not this year, but if we didn't have 280E, I guarantee you next year would be our first year we'd pay a dividend if we didn't have 280E, for sure.
So,
but that, I don't want to tell, that is out of the question while we have 280E, because the government's basically taking all the money we make for themselves.
So if 280E is pushed to the side, you're going to see dividends happening in this industry, is what you think?
Yeah, for sure. For sure. Cannabis is going to be a dividend-paying business. There's no question in my mind.
Wow.
Now, Boris, I want to ask you this as well. Of course, John Fetterman, he won the senator race in Pennsylvania against Dr. Oz, and you have a lot of interest in Pennsylvania. So do you see them going rec? Is that the next state that could go rec sometime in the future? Does John Fetterman move the needle in that state?
Yeah, well, let's be honest. The senators don't have any influence over the state politics, right? They represent the state at the federal level. So, obviously having a cannabis-friendly senator is always better than not having one. So, but I don't see him influencing, the governor or the legislature too much in terms of what they're doing. And so, listen, I personally think that as Maryland now is adult use and New Jersey, Pennsylvania is in a very interesting quagmire sitting in between two adult use states where their citizens are going. I mean, our Belmar store is as successful as it is. Everybody knows for what reason. We sit 10 minutes out of Central Philly.
Yeah.
Right? And it's the most highest revenue and profitability generating store in the country, bar none. And so, I mean, that thing is just a monster. And it's there because you've got a major metropolis, and it's got the only rec store within. Basically, we sit in a suburb. It's on the New Jersey side, but we sit in a suburb of Philly. Most of the people that live in Belmar, Cherry Hill, and all these areas, that they work in Philly. They don't work in New Jersey.
Yeah.
And so it's basically a suburb of Philadelphia, and it's the only. Imagine being in a multi-million person city, being the only adult use store in the city. Obviously, it's going to do well. And so I think they're going to be forced to go adult use. And and we'll see how long it takes. Right, we've got some issues there because there's a lot of Republicans in the both houses in Pennsylvania that are on the fence over cannabis. But here's the thing I think that is going to change in the U.S. again. So the worst thing that happened to cannabis, and I don't mean to be disrespectful, was actually Joe Biden, and not for the reasons you think.
Okay.
Not because he didn't do anything on legislation or all that, but because of the $1.3 trillion package in June of his first year that basically closed the deficit holes in every liberal state in the country, right? Illinois, California, New York, Pennsylvania, New Jersey, they all got money that closed up, and so they didn't have the urgency for tax revenue.
Right.
And given that cannabis is still a controversial subject, they all put it on the back burner. Well, guess what? That money's ending now. And they all have to start, and we have a recession on our hands, so they're all going to have to start looking at tax revenue generation, and I think the dynamic across the country is going to change dramatically. You're going to see states having to go adult use because they need the tax revenues.
So their hands are tied. It's almost to the point where they don't have a choice, is what you're thinking.
Yeah. So I think Pennsylvania, high probability that Pennsylvania goes adult use.
Yeah.
Because of the fact that they're squeezed in between two states that are already adult use.
Add to that, it's just Missouri, Maryland. It's the overwhelming support, the growth of an industry. Again, we continue to look at the decline of alcohol sales in an overwhelming amount of support where people are voting in favor of adult use cannabis in all these different states. It's tough to really gauge day to day as to how much change is happening, but when you stop and look up as to where we are, it's really, I think, become official that this industry is become mainstream, don't you think?
Yeah, I mean, cannabis is now a consumer staple. There's no question about it, right?
Yeah.
People, it's not a question of want; it's a question of need.
Yeah.
People need it, and whether it's sleep, whether it's anxiety, whether it's all these different mood states, people are under stress. We're in a recession. This is an industry that typically performs well. These kind of industries typically perform well in these kind of environments, and I think that this industry will perform well. I think the thing that's holding this industry back really is the 280E and the cost of capital.
Yeah.
Listen, if we didn't have those two things, you'd have the biggest boom you'd ever seen in your life in this industry. It's those two things that are holding it back, because we have to price our products at a higher price than the street value. So we the best way to kill the illicit market is to price it at existence. Let's be honest. And you can't do it when you've got high tax rates, 280E, and a high cost of capital.
Yep.
Because, right, the illicit guys aren't paying any of that stuff. None of it.
Yeah.
But you're going to see something very interesting. Curaleaf did a big study, and we're going to be releasing it soon on the quality of the products being sold in the illicit market. And watch and wait. The next week or so, we're going to show the world about what people are buying from these illicit markets and what they're putting in their bodies.
Interesting. Which is so important for consumer spending and buying and research. Some of the conversations I've had. We'll let you run. I know you've been busy, but I got to ask, you got to be shocked. The Jets are 6-3 and the Giants are 6-2. What the heck's going on in New York, buddy?
Listen, with the Jets, nothing ever surprises me. That's what I'm going to stop. Huh?
Yeah.
How about that? They beat the Bills and Josh Allen.
Yeah,
That was a little bit of a surprise to me.
Listen, the Jets are a quagmire, right? An enigma.
Yeah, pretty much.
That's what they are.
To say, Lace. Listen, appreciate you checking in, and let's keep in touch, okay? Hey, everyone. Thanks for watching. So what'd you think of the interview? If there's any information that you want to know more of or want to learn about, then provide us with feedback by leaving a comment below. And if you like what we're producing, then feel free to subscribe to our channel, share this video with your network, and as well, click on that bell for all notifications, because we would not be here without you. We appreciate it. Thanks for watching, everyone.